Hi everyone, it's Paul Brown here from Wealth21. Hope you're all doing well. I put together a market update as at the 3rd of June 2023. So firstly and importantly, any information in here is just general information only. It doesn't relate to your specific circumstances. So if you've got any questions about your own investments, please give us a call or seek advice from an authorised financial advisor. Let's look firstly at the index returns. Now this is to the 30th of April. I realise we're a month ahead, but I don't have the end of May information yet. But just looking at the various sectors, the defensive sectors over the past year, we've got positive returns, obviously improved returns on cash with interest rates rising. Bonds actually in positive territory over the past 12 months. Global bonds is still in negative territory. That's partly to do with exchange rates. So listed property is still showing, or was still showing losses at 30th of April. It's recovered a little bit in May. Shares, Australian shares, positive returns. Best returns over the past 12 months are from international shares, but that's partly because the dollar is down 6% compared to the US dollar over the past 12 months. Over 10 years, you see results you'd expect. The defensive asset classes with the lowest returns, but generally more stable returns. And the growth sectors, property, shares, providing attractive returns over the past 10 years and also 5 years for most asset classes. Interestingly, the Australian dollar against the US dollar has weakened, down over 4% per annum over the past 10 years as well, and that's led to international shares providing a better return than Australian shares. Looking now at just three of the index returns for different profiles. So conservative, a positive return over the past year, and similarly with balanced and growth. Okay, so positive returns, but still pretty modest returns, and certainly nowhere near inflation, which been around 7% over the past year. Over the past 10 years, though, you see conservative return, balanced indexed return at 6.5%, all well above inflation over that period of time. So, you're kind of getting the returns that you would expect over the longer term. And let's look at some charts. Now, these are all 10-year charts. So Australian interest rates, actually the Reserve Bank unexpectedly increased rates at the start of May by another 25 basis points, so up at 3.85%, and that's the highest rate that interest rates have been over the past decade. Very steep rise, of course, since May 2022 when the Reserve Bank started increasing rates. Looking at the 10-year bond rate over the past 10 years, we're sitting at about 3.7%, and that's, pretty much as high as it's been in the past decade. You kind of have to go back to about 2014 for 10-year bond rates to be, or 10-year bond yield to be at that level. We obviously had very, very low returns during the COVID period, but then a big increase in bond rates in 2022, which really caused a lot of ructions, not only in the bond market, but global markets generally. Looking quickly at the Australian share, the ASX 200, a lot of volatility since COVID. We had a big fall due to COVID, then a big rise with the recovery, but then it's been very much up and down over the past 2 years. And looking quickly at Australian listed property, this is again a 10-year chart. Very steep fall when COVID came along. A lot of people, working from home, and that had a big influence on listed property prices. But then we saw a recovery, but it's still down a fair way. Since the sort of late 2021 when the market reached a high point. It's still well below that point at the moment. And this is the international, this is just the Vanguard International Shares ETF, and this 10-year chart, while it's volatile up and down, it's not quite at the highest point it was at the end of 2021, but it's been pretty positive over recent months for sure. And last chart is just the gold price. This is just the gold ETF. the gold ETF really went up. Gold's used as kind of a hedge against inflation, and it's an alternative asset, of course. So it went up a lot during COVID, pretty flat last year, but with the uncertainty that we saw with the banks earlier in the year, we saw a big rise in the gold price. And finally, this is we're in June 2023, so just a final reminder that if any concessional contributions where you're claiming tax deductions need to be obviously in your super plan before the 30th of June, preferably well before the 30th of June. So don't cut it too fine. If you need some assistance with end of year super contributions, please feel free to give us a call. And also I did a video a couple of months ago on various different super contributions, so feel free to refer back to that as well. So any questions, please let us know, and thank you for listening.